Today, my guest is John Wilhoit. John is a real estate investor, an asset manager, an author, and he's also a returning guest to CREPN Radio. I encourage you to check out one of many prior talks, and those will be listed in the show notes. John has taken us through multifamily markets, asset classes, trends in real estate, and also his rent roll triangle. Today, we're going to speak with John about asset management versus property management and what's the difference. But first, a quick reminder, if you like the show, please let us know. We would love to hear from you. You can like, share, and subscribe, and always leave a comment. We'd love to hear from you. Also, if you'd like to see how handsome our guests are, be sure to check out our YouTube channel, Commercial Real Estate Pro Network. With that, I want to welcome back my friend, my guest, John Wilhoit. Welcome back to CREPN Radio.
Yes, please go to YouTube. We both shaved today, so that is not always the case.
Comb my hair.
Yeah. Now, today's episode for me, this really is my sweet spot. I know we've done a handful of these programs before, but we've never really focused on asset management. And if you look at my LinkedIn profile, you'll see that I subscribe myself as a real estate asset manager first and as an author second. So this is really where I live and breathe, specific to multifamily asset management. Now, we're not talking about warehouses or mobile home parks or single family. We're referring to, at least with respect to my expertise, apartments or multifamily assets.
Well, John, that's awesome. I didn't realize the progression in our talks thus far had kind of led us up to this point, but that makes complete sense. I always knew that was kind of your bailiwick there, your point of expertise. Before we jump right into it, if you could just take a quick second and share with listeners a little bit about your background, and then we'll jump into it.
Sure. My name is John Wilhoit. You can find me at johnwilhoit.com and also on multifamilyinsight.com, which is where I have a magazine specific to multifamily. I've been in this business for far more than 20 years. If I say the actual number, it makes me seem old, and I am old, but I don't want to say how old, but I've been around this business probably as long as Darren's been in insurance, all specific to multifamily. My background includes stints with AIMCO, with the State of Maryland Housing Fund, and also with HUD. Most of the last 15 years, I've been providing services to customers specifically in multifamily and more specifically in market rate deals. But historically, I've done a lot of work in tax credit assets also. I'm the author of 5 books. The most favorite book of mine that people seem to like is entitled How to Read a Rent Roll. And then second to that is a book entitled Rent Roll Triangle, which really focuses on the revenue side of multifamily and how to really capture a specific NOI and go beyond just NOI, but look at an asset from a global revenue perspective.
Got it. Well, let's get into our topic today, asset management versus property management. And I guess my first thought is, would it be better to define the two and compare them, or would it be better to go start with one and go through that and then compare that to the other?
Well, they're both necessary components of running a property well. So let me just start with a little bit more of an umbrella presentation for a couple of minutes, and then we can talk about asset management and property management. Yeah.
All right.
But in any real estate deal, so this is global to any asset, there's 3 components to running a deal well, and that is knowing and understanding the property itself, the people that are engaged in that property, and then the paper that wraps around that property. So let me go into that a little bit more. So every property is on a specific street, right? It has an address, but it's more than that. It's also a part of that ecosystem within that market, within that city, within that submarket. And then there's comparative assets that surround that assets. And then there's also more specifically competitive assets, those that the property specifically competes against. They may be across the street or half a mile away, but just because a property is comparable doesn't necessarily mean it's competitive with the asset that you have or that you're operating. So there's the property, and then there's the people, which is the most important part, which is where we're going to spend our time today, which includes asset management, property management, ownership. That's on the ownership side or the investment side. But there's also the residents that reside there. They are people too, and they're part of the equation. So there's a lot of people interacting with any given asset. And then lastly, there's the paper. And the paper includes mortgages, leases, insurance documents, all of these things that we wrap around a specific asset that make it run the way that it runs. And there's three options there where things can go really bad, right? But asset management, and I'm switching now to asset management. Asset management, in essence, acts as a controlling feature to assure that those three aspects are running smoothly on behalf of ownership. The property itself, the paper that's wrapped around the property, and then the people that are engaging with that asset. So that's the role of asset management, in essence, to act as an owner's representative. So within that structure, property management deals with the asset on a day-to-day basis. Property management is there to operate the business of the multifamily asset, which means they're responsible for daily maintenance, for daily leasing, for daily renewals, for daily maintenance, all the things that have to occur for that asset to run optimally on a day-to-day basis. So where do those two intersect, asset management and property management? Asset management, being responsible to exclusively ownership, has a role in selecting property management and assuring that property management is doing its job effectively. So, and I'm going to segue here a little bit. You know, everyone looks at property management companies and says, oh, this one's bad, this one's good. Stay away from this one. You should really try to hire that one if you could. That's really a secondary factor, because within any property management company, they have teams, people that are a little bit better than what they do than other teams. So as an asset manager, you can't just look at the property management company name and say, oh, I don't like that company, because you really have to look at the people that they are engaging for you on a specific property.
Got it. So let me ask you this. As I'm assuming as a passive investor, you'd be looking for an asset manager when you invest, whereas more of a, like if you're a general partner in a syndication, are they typically acting as the asset manager?
Yeah, let's look at scale for a minute. So when we're talking about deals, multifamily deals specifically, that are under $2 million or under $3 million, very often the owner is attempting to act as the owner, the property manager, and the asset manager. So things get a little bit muddled. But as the portfolio or as the size of the assets grow, then those responsibility centers or those silos for ownership, management, and property management start to segregate a little bit and become more defined. But for the smaller deals, when an owner who in essence doesn't have a lot of experience in ownership of multifamily assets attempts to do all three, there's going to be trouble, because if they're a new owner, they probably don't really understand the high necessity for professional property management. That is so important for an asset to run at its optimal level. So if you're new to the business and you just bought a 48-unit deal or a 22-unit deal, and you're looking at managing the asset yourself, thinking, in the back of your mind, well, how hard can it be? Well, it's a 24-hour business. The velocity of even a small multifamily asset doesn't go away on Saturday and Sunday or holidays or Easter. It's always in operation. So think about that before you consider taking on property management as a side gig to your day job or your professional job during the day. Consider just factoring in the cost of property management, and that in and of itself will allow you to focus more on asset management type endeavors, such as long-term business planning, such as capital expenditure planning, such as putting together a business plan that reflects a reasonable timeline for an exit to that asset. Because every asset that's purchased eventually is sold. I mean, even if it's 50 years later, that asset ends up with different ownership at some point in time in the future. But if you're not looking at that consistently, then how do you know when that event should occur? So selling an asset doesn't mean you're getting out of the business. It just means you may be transferring to a different asset, maybe larger, maybe smaller, maybe a different asset class. But people that get in the business of real estate ownership, they generally over time build a portfolio of size if they're really focused on it. So having within your business plan, which is what an asset manager would provide as part of their services, is a big factor in recognizing when that event, that sale event, may need to occur.
Got it. So the question I was trying to, I guess, just understand, if I'm a passive investor, would that be like a good question that I should be asking? Who's the asset manager? I mean, is that, and then try and determine their qualifications? Is that?
Well, if you're a passive investor and you're investing in LLC, right, or a limited liability company, or into a specific deal with the general partner, it would behoove you to ask them about who is asset managing the property or the portfolio on behalf of the general partner. And if the answer is I am, this general partner says I am, well then that poses further questions, right? What are your qualifications to assume the asset management role within this deal? Because just because they can structure a deal doesn't mean they will be doing property management, right? And the same occurs, or the same is true with respect to asset management. Just because they have the skill set to put the deal together and provide you with a vehicle for investment doesn't necessarily mean that they have the skill set for asset management and property management. So just dissecting those, putting those on a separate step and talking about them separately will provide you, the passive investor, with far more information than you would have otherwise if you didn't ask that question.
Got it. So if I understand just kind of the summary there is the asset manager works for the ownership. They're essentially your strategic plan, or they're in charge of the business plan, and the long range is how you're going to dispose of the asset. But in the short run, it would be finding the property manager, planning for and managing the capital improvements, any kind of long range plans for the property, and like you said, ultimately the disposal or sale of the property. Is that, did I get most of that?
I think so, yeah. Asset management is responsible for the property on behalf of ownership, and their role is to act or engage the property and everyone that's working on behalf of ownership at the property or for the property on behalf of ownership. So asset management is reviewing insurance documents. Asset management is planning for capital expenditures over more than just the next quarter or year, but a longer term. Asset management is responsible for assuring that the appropriate property management staff is on site and doing what they need to do on a consistent basis.
Got it.
If not, then asset management is responsible for finding a different property management company or team to replace the existing. But more often than not, I will say this, as an asset manager, I very often spend a good part of my time assisting property management companies in building capacity. So as much as it seems easy to change out a management company, it may mean that you're just changing one set of problems for another set of problems. So if you have basically good people with some weaknesses, it's a better long-term strategy to assist them in building capacity because they already have history with the asset. And so it may just be one component of property management that they're weak in, whether it's marketing, whether it's maintenance schedule, whether it's a turnover schedule, to make sure that when you have a down unit, it's not sitting for 2 weeks, 4 weeks, 6 weeks. It may just be a component of property management where the existing company has a soft spot. So it very often is far more productive to assist them in becoming better at their job versus just saying, oh, we need to get rid of these guys and get some different guys. Because then you're starting all over again. You don't know what the next folks' strengths and weaknesses are until they get in there for a season.
Yeah, you don't know what you don't know.
You know what you don't know.
Yeah. So let me ask you, with respects to the property and the asset manager, would it be an expectation that the asset manager would be a frequent visitor to the property?
Well, if we're talking about smaller assets, those that are under $10 million, then the property manager likely is in the same city as the asset very often. When you're talking about a significant portfolio, an institutional portfolio of $100 million or higher, those assets are not even regional. They're generally dispersed over the country, and very often portfolios are much larger than that, of course, $1 billion and higher. So the asset manager will likely be on site annually, more often if necessary. So that's for a stabilized asset, however. Okay. Now, if it's a development or a project, and when I say project, I'm referring to a development that's in construction. If it's a project that's in construction or is having significant work or improvements accomplished, then the asset manager could be there substantially more often. In fact, as much as weekly. But depending on the dollars involved, then asset management may have a project manager on site reporting to asset management. So therefore, asset management is back to quarterly or annual visits because they have eyes and ears on the property. And something, that we have today that we didn't have 5 years ago, at least not in terms of consistent use, is you and I are talking from a distance of 1,700 miles today, right? We're looking at each other in the eye. I can FaceTime my daughter in Atlanta, and if she picks up, I can see exactly what she's doing, which she doesn't always like, of course. Right. So we have to pick the times, right? But from an asset management perspective, if I have a project manager on site and they're having a significant issue, they can video me real time, and I can see the hole in the ground is filled with water, or I can see that 4 pallets of roofing that was there yesterday is gone today and it wasn't installed. It's just gone. So those are things that bring that real-time asset management into play, that give us a little bit more insight. And I won't use the word control because we're really not trying to control the asset. We're trying to control the finances of the asset, which takes into consideration, depending on the status of it, whether it's in construction, stabilized, in lease up, there's different matters or different aspects of the asset that we're attempting to control. You never control the entire asset for the entire term, right? There's too many things that we don't know, as we were talking about earlier. We don't know what we don't know. But if you're implementing an asset management system for a portfolio and you have systems in place that allow for consistent contact with property management, then that's the cornerstone to assuring that you have some insight and consistent reporting and information flow to asset management, which in turn reports to ownership.
Got it. Let me ask you, what would you expect the budget line item for asset management to be, as far as, is that like a percentage of rents, or how's that?
There's so many different structures. You can say X dollars per door, but let's just talk about a stabilized asset. If it's a stabilized asset, then it's likely going to be in the 1% of revenue range, but it can certainly ratchet up much higher depending on the level of involvement of asset management. So if it's a redevelopment, then that's far more hands-on work, right?
Right.
It is in redevelopment, and that redevelopment may go over the course of 2 years. So asset management is substantially more involved for that 2-year period until they step back into a normalized asset management role. If it's a project that's in construction, then the asset management, there's no revenue, right? There's no revenue because the deal isn't generating revenue yet. So will likely be a fixed fee. But then the next question is, at what level of involvement? As I mentioned earlier, do we have a project manager on site? Well, that's an additional expense that's directly related to asset management, but the asset manager is not getting paid those fees or that salary, but yet it's a necessary component of implementing asset management during the construction phase.
Got it.
Say 1% for a stabilized large asset, but if it's a stabilized large asset that's in flux, then there may be other incentives for the asset manager, such as a percentage of revenue at sale, if they're managing the entire process from acquisition through disposition. So there's different incentive plans that can be structured on behalf of asset managers by the owners.
Got it. let's talk about property manager or property management. You've kind of referred to throughout talking about asset management about their relationship with the property management. What are some specific things? I know in the beginning you mentioned kind of the day to day, but can you dive into that a little bit for us?
Sure. Property management or the property manager is basically your key man in running a business. And of course, it can be a woman, it very often is, but I'm using the term key man from an insurance perspective. But that's the person that's running that business. So that business could be 22 units on the south side of Miami, or it could be 450 units in upper Chicago. But there's still going to be a property manager that's on point for that business. And I call it a business because it is an operating, living, breathing business, right? It has customers, which we refer to as residents. It provides a service, which we refer to as housing. And so providing that service, there's a lot of things that have to take place. They have to find customers, those that fit their model from a resident rental perspective. They have to collect revenue. They have to pay expenses. And they also have to provide ongoing services, which are daily services, such as making sure the property is neat and clean, making sure that the parking lot is operational, making sure that security lighting is in place. These are all daily events. Taking care of regular maintenance, taking care of emergency maintenance on a 24-hour basis. And then when a particular unit becomes vacant, making sure that that unit is back in service in as short a period of time as possible. Because every day that it's not rented is lost revenue. So those are all matters that property management is responsible for, that require them to be on point, on property, appropriately staffed, and doing the things that they know they need to do to run that business at its most effective.
You mentioned the asset manager visits to the property, anywhere from annually to quarterly, depending on what's going on. How often would the asset manager be in communication with the property management?
Oh,
Or would,
likely weekly, if not more. It
okay.
just depends on what's going on. If it's a long-term 200-unit institutional property that's stabilized and it's been doing the same thing for the last 18 years, there's not a lot to talk about, right?
Right.
If you've got the right team in place, you'll probably be in communication with that person about some matter, weekly or monthly. But it will be, hey, we need to insurance. We need to renew our insurance. Just want to make sure that $100,000 development or redevelopment project is staffed and ready. That's going to start in 30 days. Is everything on queue for that? Maybe replacing the parking lot. Which if you're replacing the parking lot, right, you can't just put everybody in the street. That takes planning beyond just having an asphalt crew showing up. It requires planning. For one of the matters that will certainly be a consistent point of communication between asset management and property management is asset management is very likely preparing monthly and quarterly reports for ownership. So over the course of time, when an asset manager and property manager are working well together, everybody kind of knows what to expect and what they need to deliver and when. But there's always a caveat, right? There's always some matter that could be happening on property that is an exception to the norm, and those exceptions need to be reflected in those monthly and quarterly reports. It could be that there was an incident of vandalism that was a $5,000 matter. It wasn't just a broken window, but somebody did something of significance. It could be a slip and fall, and two people slipped and fell in the same area one day after the next, which means the matter wasn't addressed after the first slip, right? So that's a matter that requires pretty immediate attention on behalf of property management. So there's always something, but even on a stabilized asset, the communication between property management and asset management will likely be weekly, but certainly monthly.
As far as property managers, is there a recognized difference between if they're working with an asset manager or if they're working with an owner? Do they, you know what I'm saying? As far as like you mentioned, like from a smaller operator and versus working with an asset manager. I mean, I'm assuming the asset manager has a degree of professionalism and kind of a schedule
Yeah.
and holding the property manager accountable.
I,
Is that?
I, will, I will say this with a small degree of tepidness.
Mhm.
It's very likely better for a property manager to have an asset manager to engage with because of the things you just mentioned. They do have a schedule. They do know what they're looking to accomplish. There's only so many things that they really have to do their job. The asset manager with an owner, depending on their level of sophistication, they could really be very painful, right? Because they don't have a schedule. They don't exactly know what they're looking for, but they know they're supposed to be doing something. I mean, they just know it, whatever that something is. But that could be a daily phone call to management asking for something. And it may not have anything to do with the property itself in terms of its ongoing viability. It's just ownership being a little bit nervous because they don't really know what they're supposed to be asking for from property management. So at scale, property managers, I think, have a preference for engaging with professional asset managers just for that reason. But let me speak a little bit more about asset management outside of property management. So as we've been talking about, there's a lot of interaction and engagement between AM and PM, right? That's a necessary component of doing the work. With respect to asset managers outside of property management, then they're also engaging with banks and insurance companies, with financing entities. It could be an insurance company that's providing a new first mortgage. It could be a bank that's providing a mezzanine loan of $500,000 behind the first mortgage for improvements to the asset. Let's say it's an older asset that's running just fine, but because it's an older asset, it doesn't have the same level of pep and competitiveness as newer assets. So ownership decides to build a clubhouse. Well, they don't really want to go get a brand new loan for $18 million just so they can access $500,000 to build a new clubhouse. So they may be looking for a mezzanine piece of debt that will come in and allow them to build that clubhouse, make the asset more competitive, and go about their business with respect to leaving the first mortgage in place. So there's insurance agents and brokers, right? That's a big component of making sure that your assets are covered and covered appropriately. That's a function that asset management will be addressing. They'll also be addressing, in addition to financing and insurance, they'll also be addressing the ongoing business plan for the asset. So that business plan generally comes through a budgeting process, but that's just a single component because as we talked about earlier, every asset that's purchased is eventually sold. So the question is, at what point is the best point to consider selling that asset? Because just because you wish to sell something because it hits it hits a target on your calendar, doesn't mean that the market is going to be favorable. So as much as we can plan around, yes, I think that we would have squeezed all we want to squeeze out of this asset in 2023. Well, what if interest rates are 17% in 2023? That will significantly affect the value of the asset. So planning ahead, planning forward is a good thing, but market conditions also dictate what can occur at that point in time.
Got it. Hey, a thought occurred to me as you were talking there. Would an asset manager be considered part of your team? I know a lot of times when I speak with syndicators, they talk about more often than not. I feel like the property management, the real estate broker, the lawyer, the CPA, all of these things. But it seems to me everything you're describing is a qualified asset manager would be looked upon by financing companies as a critical piece.
It's back to scale. The presumption is for smaller assets that the general partner is also acting as the asset manager. But when you get to scale assets or portfolios of $100 million or higher, I think there's a presumption that asset management, there will be professional asset managers engaged.
Got it.
To address the assets on behalf of ownership and act on behalf of ownership with all of these other parties that we've been discussing. And the one I left out, which you just brought in, is accounting. So as much as we may have in-house accounting and in-house budgeting and in-house financing, we still have an audit, right, for an asset of size. And someone has to perform that audit, and the outputs of that audit require review, because very often there's exceptions. Very often there's trend analysis that doesn't meet with expectations, and asset management is there to address those matters and to assure that they don't just slip in cracks.
Got it. John, I'd like to shift gears here for a minute. As I mentioned to you before we started the call, by day I'm an insurance broker. You knew that. But in insurance, we manage risk, and there's three strategies that are typically employed. Either you can avoid the risk, minimize the risk, or transfer the risk. And
I should write that down. That's good.
You like that, huh?
Yeah.
Well, insurance is the transfer mechanism that's usually used. And so as a matter of practice, I have been asking all of my guests as of late if they could identify what they see as the biggest risk. And the biggest risk that they see, whether it be that they face or that investors face or that their clients face. And I'm not necessarily looking for an insurance answer. I want to preface that. If it is insurance related, that's great. But I just want to be more of ask the question to you: what do you see is the biggest risk?
I have an answer, but I'd also be interested in knowing what some of the other guests have responded. But I have an answer first, so I won't play that card and say, "Hey, what did the other guys say?"
Right.
My response it came to me straight away, so it's not something that I had to contemplate very long. The biggest risk to any asset is complacency. And complacency very often is implemented by ownership because they're just not engaged. They just don't want to do the next thing, whatever the next thing is. Well, that's going to cost too much money, so we don't really need to do that right now. We're not going to keep this asset much longer, so we don't want to put any more money into it. We've decided that we're going to sell it next year, so let's just keep things the way they are. Or, you know what, we've owned this asset for 20 years. It's working perfectly fine the way it is. We don't need to change anything. So that complacency by ownership very often negatively impacts the operations of the asset. Because it's hard for me to say it, but it's true so very often. When ownership doesn't care, why should anyone else? And that trickles down to asset management and property management. So if the owner is just completely out to lunch, never shows up, never calls, never responds to an email, never asks a question, now let's presume for a moment that there is no asset management, okay? Then property management just must presume that they're doing everything that they're supposed to do, and there's nothing that they should do any different. So you implement asset management into that same scenario. There's things asset management can do without having to knock on the door of ownership and saying, hey, can we do these things? Because very often, as I mentioned earlier, sometimes it's just a matter of systems, of implementing capacity, of doing things better than they've been doing them, because their answer to why they've been doing them, property management, is, well, this is the way we've always done it. Well, that doesn't necessarily mean that's the best way to do it today, right? As you go forward over time. So complacency of ownership, I think, is the biggest threat to stabilized assets. And there's no great way around it as a property manager, because they don't want to rock the boat. But asset management comes in the door to rock the boat. We're there to make sure that the asset is operating at its best and its highest level of efficiency on behalf of ownership. But as I just mentioned, sometimes ownership doesn't want to do anything. So if I put together a business plan that says, Mr. and Mrs. Owner, I'd like you to invest $250,000 in this asset, and I can tell you we'll double your rate of return. And it will take about 18 months, but you're going to go from 11% to 22% internal rate of return for the sake of investing $250,000 more in this asset. Doesn't mean they're going to do it. Even if they have money sitting in the bank and more than they can spend, well, I'll get back to you on that. I'm not sure I want to do it. Well, as an asset manager, that kind of ties your hands, right?
Right.
In
Right.
property management, like I said, if they've been doing what they've been doing and nobody's saying anything to them, they're going to keep doing what they're doing. So complacency is, I think, the biggest threat to stabilized assets. And complacency from ownership is the biggest threat within complacency.
Got it. No, that's a first time I've heard that, but it's so true.
Uh-huh. That's an asset
And
manager's perspective.
no, exactly. And that's one of the things I love about asking the question is
Yeah.
that everybody's coming at it from a different perspective.
Yeah.
And my hope is I'm parsing this portion out as a separate feature. Not that I won't include this in all the episodes, but it's as just kind of a promo for people to check out the full episode. So, but yeah, you'll have to check out. You have to go listen to some of the other guests,
Yeah.
see what they've said.
Well, once you've got about 20 of them, then I can assist you in writing that book.
Yeah, well, we're nearing that benchmark there.
Very
So,
good. Good.
but hey, John, before we wrap this up, where can the listeners go if they'd like to learn more or connect with you?
JohnWilhoit.com is my author website, so that's the best place. You can sign up for my newsletter, which is a periodic event. And then this year, I started a digital magazine entitled Multifamily Insight, and that can be found at multifamilyinsight.com. I have a legacy blog at multifamilyinsight.net, and that legacy blog has about 300 articles specific to operating, financing, marketing, running multifamily assets. And then thanks to my good friend, J. Darren Gross, last year I started a podcast, which has maybe 25 or 30 episodes thus far. And you can find that also on johnwilhoit.com. But I only have that podcast because Darren guided me to the point where I could kind of step off the cliff on my own. And I think I'm still falling, but at the same time, it's been a good experience.
You drank the Kool-Aid, huh?
I did, yes.
So, well, welcome to the fun.
Yeah.
John, can't say thanks enough for taking the time to join us again. As always, I've learned a lot, enjoyed it, and I look forward to doing it again soon.
Same time next year.
All right, John.
All right,
For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.